All right. Hello, everyone. I hope everybody is joining us in today. This is Demetris Curry. It's so good to see everybody. So good to see everybody. Listen, I do not own the rights to this music. So we're going to actually turn it down and give everyone time to start coming in. Thank you guys so much for joining us today. We are really rocking and rolling with questions Q&A that we've been getting from everyone. A lot of times we get Q&A from a lot of our clients and potential clients that have some questions about what they can do to better position themselves. But before we even get into those questions, tell us what state you're joining us from. Where are you joining us from today? Are you in the South? Are you in the North? Where are you joining us from today? We would love to know where everyone is right now. Feel free to put it into the comment section of where you're joining us from. Okay. All right. So let's go ahead and do one thing. Let me say this very quickly. Guys, I want to thank you for being with the Demetris Curry brand and Inspired for Greatness brand for us all these years. We want to say thank you so very much for just staying with us. We have taken some time off, as you know. We did take some time off to do some recovery and everything, and everyone knows about some of the recovery that I had to do over the last several months. But things are getting better. I feel better. I feel good in my spirit. And I'm so glad that we have the opportunity to work together and to be together in this endeavor of moving to the next level in your finances. So I wanted to take a moment to say thank you for that. We appreciate you. We honor you. And we're glad that we've had the opportunity to be in your plans, to work with you in your strategic plans. So, where are you joining us from today? If you have the opportunity or if you're able to type into your comments, please let us know where you're joining us from today. I know some people are just getting off work and they're driving. Do not try to type anything while you're driving, okay? So I just want to say thank you so much, guys, for being here with us. And we want to go ahead and look at some of the questions that we've been getting from some of our clients and potential clients that sent in some messages to us via inbox. Some comes in via text message sometimes, and we thought that was really cool. That every once in a while we'll get a cop, somebody, and they say, "Hey, Miss D, someone told me to send this question to you, and I'm not really sure where to begin. Can you help me a little bit?" So I said, "Hey, absolutely. Let me know what your question is, and then maybe we can try to gear you in the right direction and help just a little bit." Okay. So let's start with our first question that we've received. If you are a landlord or a business owner, this particular session right here is really going to give you some great input, some great nuggets to use. Okay, so I'm so glad that you have the opportunity to be here with us while we're talking about this. But we're going to mix in two things. So let me first give you a briefing. Inspired for Greatness is a consulting firm. We actually help business owners and we help maybe some that are trying to get in business, small business owners. But a lot of our clientele is mid business owners up to corporations. Okay. And how do we assist? Well, as a consulting firm, one of the things that we try to do is to sit down with them and help position the company in a way to build their assets. And the assets is like real estate, properties, possibly they want to get some equipment loans for their existing company, even if they want to build retirement locations, and even if they want to try to do franchises. We do help with financing of franchises and things of that nature, right? So on the left side of our services, we work with business owners to help them get established and get assets that they can get funding for. And so we're responsible for helping them find the funding, okay? And so, but on the other side of what we do is helping companies, corporations, employers try to provide benefits for their staff and also use the insurance as a way of putting away some of their big ticket items. They may have a lot of cash that they've received from a big real estate deal, or possibly they're trying to put coverage on their key man person in their business. even maybe a general manager that they want to cover and make sure that that particular person has insurance on them, and they'll be able to replace them in the event that they were to leave or pass or something of that nature. That's also one of the things that we do. Okay. So I wanted to first give you that insight on what all we do. Okay. All right. So ask your questions, drop your questions inside of the box here. If you have some additional questions for us outside of the ones that's already been submitted. Okay. All right. So the first question, tell me the best way to get qualified to buy a rental property in my business name. What is the criteria? Okay, that's a really good question. This question came from one of our potential landlords that's hoping to jump into the landlord space. And it looks like he wants to do long term rentals. Okay, so one of the things that we look at as lenders and look at funding brokerage lenders is that we want to know exactly what are you trying to do with this property. If we have the idea of what the end game is going to be, that tells us what the criteria is going to be. So for instance, you may want to use a property for a long-term rental. You may say, hey, I want to get into the short-term rental space, possibly even do a fix and flip, or you may even say, I just want to rehab a space and see what I can get done with it, right? Okay, great. Those are things that you could possibly do with your property if you want to try to get into being a landlord or being a owner of a real estate property. Well, one of the things that you want to find out is how much is it going to be required for that property as far as purchase. Get a purchase agreement on that property. As a lender, the criteria is going to be, hey, are you really a business? Okay, because we deal with commercial real estate loans. So, are you a business? Do you have articles of incorporation? Do you have bylaws to show who is actually owning percentage of that property, right? Do you have your IRS EIN letter? All of those things will be required as basic criteria to try to get a property in your business name. So that's your articles of incorporation. That's also for your EIN letter. That is also for you to have bylaws. And some states do not require bylaws, but it depends on who's going to do the funding for that property if bylaws would be required. And if that is the case, guess what? You can quickly get some bylaws. It doesn't take a lot to get bylaws. You can do it in 10, 15 minutes on your computer, okay? And in addition to that, they're going to want to know how much of that property do you plan on like renovating, or how much do you plan on putting into renovations? All of that is criteria for them to decide if this is going to be a good loan process for you, or if we need to look into a different type of funding opportunity for you if you're looking at doing something other than just buying the property and sitting on it. Maybe you want to do some construction, some renovations. If you're thinking about doing a fix and flip, then you're going to get some renovations involved. Then you want to make sure we got the right type of loan for you as a landlord. You'll also get approved for a DSCR loan. That's a whole nother conversation. We'll talk about that on another day. But that DSCR loan is one of those things that you can do as a landlord, and it's very beneficial if you are a landlord. Okay. So those are the basic criteria: your articles of incorporation, your bylaws, your EIN letter, and then you want to also make sure you have a business bank account. Okay. Have to have a business bank account in your business name, or they will not think that you are a true, legitimate business attempting to buy a property in your business name. Okay, so let's go to the next question. The next question is, I have life insurance at my job, but I don't want to stay there anymore, and I'm looking for a better job. Well, good for you. Can I get life insurance coverage that will allow me to own myself without losing it between jobs? That's a good question. And if so, what is the best option? Okay, so life insurance, and this is reason why we're talking about this. We're going from real estate and we're also going over to the life insurance. But remember now, with our particular business as a consulting firm, we actually help people not only buy assets, but also understand how to create generational wealth by making sure they're able to pass things along to their loved ones and to build assets and a legacy for their trust. Okay, so all of that is very important. So this is a good question, and it needs to be answered. So if you are trying to get life insurance for yourself and you have a group policy, you're absolutely right. When you work for a company, that group policy that you have does disappear once you leave. Now, there are some options. Some particular companies will allow you to keep the group coverage when you leave. However, the rate may very well change because you actually are paying a rate right now that's based off of you still being with that company. Okay. So with that being said, you're absolutely right. I would get a life insurance policy that is something you can control and that comes out of your own bank account or checking or savings account. And no matter where you go and no matter where you are, that particular policy is yours. Okay. Keep in mind that if you're trying to do something like a cash policy or maybe something that builds cash or retirement or even have those additional, critical illness coverages in it, all of those long-term care coverages, you want that policy to be consistent. You want to make sure that it's something that you have authority over and you don't have to worry about losing it between job to job to job, especially if you're out there looking for something better in your career. Go ahead and get you something that is going to be all in your control. And you can move around as much as you want to. Go ahead and start a new business or whatever you plan on doing in your career. But that is part of your portfolio that you've put together, showing that you are now in control of not only the life insurance, but also the cash values that you built into that policy, or to even make sure that the rate that you have is based off of your then age and your then health. Because each time that you move around, and each time that you leave to go get another policy years later and another policy years later, it is then going to be looked at your then age and your then health. And you don't know if that's going to still be the same. Okay. So really great question. Yes, definitely get you a policy like that. We'll put a link here in the comment section. If you would like to talk with us and our team about a life insurance policy, we can help you with that, get some quotes as well. That is free to do that. And we'll try to work on something for you. We'll ask some questions to see what's best and what's going to be a great fit for you. Okay. We call that, we try to call it our quality assurance types of questionnaire. Okay. So that helps us make sure we're giving you what you really need. Okay. All right, so let's look at the next question. It is, I own a home outright that I use as a rental cash flowing property. Can I refinance the property and get the equity out to use towards buying another property? Look like somebody's been listening to these lives. I love it. If so, how do I do that? How do I do that? Well, yeah, you know what? That's a really good question. So yes, if you have a property, and this means you own the property, it is a rental property that's cash flowing. That means you have tenants inside the property that's paying for the mortgage and then some. That means that they're actually getting a profit out of this particular property, which is great. Okay. Now, cash flow property means just that they're getting some cash in. Hopefully they're making a profit and not breaking even. Okay. Now, with that equity that you've built into this property, and he said that he owns it outright, so he is making some equity. He ain't got no mortgage to worry about. Then he wants to use that money and to buy another property. You can definitely refinance that property, use it as collateral to the next loan. Okay. And what you would do is you would ask them for a refinance cash out. That is a specific type of refinance property. You want to say, hey, I want to cash out this property. I want to actually get the equity out of here. What they would do is they would look at your credit score, your personal credit score. This is where you want to be really careful. They want to look at your personal credit score, even though it's in your business name. Okay. They're going to look at that. And then if you've already built business credit, they'll consider that as well. Okay. All right. So this is the thing that you really want to keep in mind. How much equity do you have in that property? Okay. So let's just use an example. Let's say you have $100,000 property and you don't have no particular mortgage on it. Well, your credit score is maybe, let's say you got a good credit score. Let's say you got the 730, 740, somewhere up in there, right? Okay. Well, the lenders may come back and say, hey, based off of your credit score and based off of the property and the valuation of that property, we can afford to lend to you 80% of the value, your appraised value. Okay. Or depend on what type of lender it is, they can say, hey, we can give you 80, 90% of the as is value. Now, keep in mind that there are different types of lenders. Okay, so you have your traditional lender basket, then you have your direct lender basket, you have your private lender basket, and then you also have your hard money lender basket. Okay, we actually have lenders that we work with in every basket. So when you actually work with us and you say, hey, Miss D, I own this property, I want to get this amount of money out of the property, I don't owe anybody on the property, what do I do? Okay. Well, if that's the case, we will actually look at your credit score. And then we'll say, based off your credit score and based off the valuation of this property and what we think we can get for it, we're going to recommend that we go through this basket of lenders. And they will be the ones that would give you the best interest rate and the best terms for your particular property. Okay. So, yes, the answer to your question is yes, you definitely can refinance the property, use it as collateral, and then keep in mind they want to make sure that your credit score is pretty decent. Normally, you can look at some lenders that's going to be above 620, 630. That is the going number in most credit unions and banks. But when you're dealing with possibly some hard money lenders and some direct lenders, they tend to be a little bit more lenient. But keep in mind that the lower your credit score is, the less they want to give you on how much cash out you're able to walk away with. That loan to value is a big deal when it comes to how much they're willing to give you out of your property. And then you can use that cash. Let's say you're able to get a good amount. Let's say you're able to get $50,000, $60,000 out, right? If you're able to get that amount of money out and you're looking for another property, then you have some negotiating power, because you have what they call source of funds, right? That source of funds you can take to the next deal and say, hey, I want to buy this property. I want to put this amount of money down, okay? And I want to go negotiate these terms. Okay, that's when you're going to have some negotiating power. And now you can say, I want to do this versus doing that, because you're coming to the table with some positive cash flow that you can use in your source of funds. And any great lender is going to ask, where's the source of funds coming from? If you have a great broker like myself, hello. We're going to actually make sure that that information is notated properly. And we're going to notate to them that you sold another property to show this one and to buy this one. And so now the documentation reflects for itself. Okay. So hopefully that really helps you on that particular question. I need to get access to the cash out of my life insurance policy that I set up over a decade ago. Okay. So you've had it for over 10 years. If I take money from the life insurance, how can I access it without being subject to taxes? Ooh, that's a good one. That's a good one. Okay, so I love to talk about this. Let me tell you why. Because life insurance policies, what you can do, you can actually borrow from your policies. Now, we're not talking about term policies. Term policies do not carry cash value, okay? What we're talking about is if you're looking at a whole life policy, maybe you have an index universal policy, even a universal life policy. One of those policies there will have some type of cash value. A lot of times I work in the whole life and index universal life space just because I like to add in some additional protections for our clients, especially on the index IUL space. That is my favorite life policy so far, with a lot of our kids and our young adults that want to build aggressive cash, yet they want to also have some additional perks in those policies like long-term care and things of that nature that you can give them for free. Okay. So, but with you saying that, you can pull cash from it by what you call a loan. Do a loan against your policy. Now, why am I saying loan, quote unquote, with the little elephant, not the elephant, but the banana ears, the bunny ears. Why am I saying that? Because when you do it as a loan, against your life insurance policy, that's where you are actually doing the avoid taxation part that you're talking about. Now, full disclaimer, I am not a tax person. I don't do taxes at all. I'm not a tax representative. I'm not a tax accountant. So you definitely want to talk to your accountant about how you want to do that. But virtually what you need to do is talk to your insurance company. Tell them that you want to pull cash from your life insurance policy as a loan. And what does that mean? They said you can put that money back on your policy at any given time, and you can even give them a payment schedule, but put it back on that policy at any given time. And then that particular becomes a loan that you pay back to your policy. Now, what if you don't pay it back? That has happened. What if you loan against your life insurance policy and you never pay it back, or you pass before you get a chance to pay it back? That has happened too. Okay. Depend on the policy itself and how it's actually written. And I tell people this all the time because there's a slew of IULs in the market. There's a slew of whole life policies in the market. There is so many universal life policies in the market. But in the verbiage of most of those policies, it would tell you that if you get a loan against your policy and you never pay it back, a lot of times if it's structured in such a way, they can actually take what you loaned against your policy and never got a chance to pay back with interest, the interest that you owe them, and give your family or your beneficiary the rest, right? So let's say that you had a $500,000 policy and you took out $20,000 just to do a few things. Then your family is going to get the rest of that beneficiary money. So it depends on how your life insurance policy is structured. You definitely want to make sure you talk to your agent, or if you need to structure something where you can try to do something like that, just give us a call. Let us know. Miss April is actually here with us today. April, I love that. She's my assistant. Her name is April, and we're in the month of April, so I'm going to be messing with her all month. Okay. But she is actually here too. She's going to put a link down there as well for anyone that has a life insurance policy that needs some assistance. Perhaps they're not sure what they have. They need to make some adjustments. We can help you with that. Okay. So here is the next question I have. I have left my old employer and opened my own small business. Congratulations. I had a 401k plan there that I want to roll over into another retirement option. Gotcha. Can you help with the 401k rollover to another kind of retirement product and not pay taxes on it? Yes, we can definitely do that. So as part of our retirement strategy that we work with, we do have partners that's inside of our organization that we always put together. So on our staff, part of our team is Series 6 and 63 representatives and consultants. Some of them are VPs with other operations and other management groups that we are closely in connection with. And with us doing that, we actually help with anything that's going to require something on the IRS level, which is going to be like a 1035 exchange. That's exactly what you're talking about. You're talking about having a 401k product that you had at your job. It may be qualified monies that you never paid taxes on and so forth. And you want to roll it into the same type of product so it does not create a taxable event. Yes, we can definitely help you with that. We do have a team that can help get that done for you. And we'll look at additional options like IRAs and annuities and things of that nature that make sense for you and your retirement years and everything else that you're trying to do. Okay. All right. So hopefully that is helpful for you on that question. Just keep in mind that there is a lot that you definitely want to be looking at on that. We consider more than just what's going on at that moment. We want to know when you plan on retiring. What do you plan on doing with those funds? Do you have someone that you want to leave it to in some form or fashion? Very important. Very important. Okay. All right. So let's look at the next question. And I think we have a question also here in the chat room. Let me draw to the question in the chat room real quick. Let's see. We have Miss Beverly. She says, how do you rebuild your financial stability after an unexpected life-altering event? Ooh, that's a good question. Credit lines, savings, etc. Seriously asking for a friend, sis. Thank you so much for chiming in for me, Miss Beverly. I really appreciate that. So when you say they've had a financial stability issue and they're trying to rebuild, rebuild. It really depends on what type of situation it is and how bad it is, right? I normally like to sit down with a person and do what we call a circle of wealth analysis. On that circle of wealth analysis, it allows me to see where you are on your income. Do you have discretionary income? It also lets me see if you have any mortgages that you're currently paying. Do you actually have life insurance or retirements already set up to fall back on? Do you have anything like a long-term care or critical illness care that you may be able to fall back on for some payout? It sounds like she may have some other things going on, maybe stability in health or stability in finances. I'm not really sure about what happened, if she lost a job or she got sick or whatever the case may be. It really depends on the situation, because there may be some other things that we can tap into to see if she qualifies for, right? Let's say that she needs additional monies. Maybe she needs credit lines. Maybe she needs savings and things of that nature. Now, I don't know about anybody else. I'm not the budgetnista. That's my girl. I'm not her. But one thing I do tell you is that I am really, really good about chopping down. You can chop it down all the way down to the bare minimum, right? But then I'm looking at things that most people don't look at. I'm looking at what's going on inside the billing cycles of what's coming in your house, whether it be water or gas or utilities or cable bills, or do you have slow bleeds going on in the house, right? I look at those things too, because the first thing I want to know is, can I stop a slow bleed where I can reallocate that money to another savings tool? And that savings tool has to be making money. Okay. Now, I'm not saying put your money into a bank account that's going to pay you 0.0002%. We don't do that. We don't do that. If you're trying to put monies away, then that money needs to be working for you while you're sleeping. So if it is not working for you at least 4, 5, 6% at least, that's your slow bleed. So if you are looking for something that's going to actually do better, and I love to tell my clients this when I'm sitting down with them and I do an analysis to see what's going on in their finances, because they're asking me, hey, I want to buy this fix and flip. I own my own business. I'm a mid-sized business. I want to offer benefits to my staff. I want to get those tax deductions. Da, 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 da. Okay, but they're telling me they're operating in the red and their things are coming at them faster than they can pay them. That means we need to first allocate what's going on in the business and where you're paying all these expenses out to. Let's see, and I tell this to my team all the time, where's the money going? Is you have this much going out, you got that much going out. Do you have any idea if that's making a return? If that's not making a return, is it tangible to move it to something that can make a return? So on the savings side, I know you asked a question about lines of credit and savings. On the savings side, I will always tell you to look for a high interest yield savings account. A high interest yield savings account is going to be a better fit for you to be able to keep it liquid, still be able to get to it when you want to, but make it work for you. Make some type of money for you while you're sleeping. Now, if you are in a position where you can put money away for a longer period of time and be able to get that particular return, like in a life insurance policy or something of that nature, then you can let that compound interest work even harder for you. There are some policies out there, believe it or not, that are paying very, very well. They normally do a 6 to 7% as they give you the quote for, but as far as performance has been even greater. Now, one thing about the insurance industry and a lot about even the financial industry with IRAs and annuities, when they give you quotes, they have to give you what they call conservative quotes of what they feel engaged they really can do easily. But what you want to look at is how is it actually performing on a quarter-to-quarter basis, and it may be outperforming what you signed up for, and that's how you know that you're in a good position. So with Miss Beverly, if you want me to speak with her, definitely please send us a private note, and we will work that out for you and see if we can do a analysis of what she has going on. And we may, end up chopping away some stuff and say, hey, do you really need that? Is that making you any money? Well, why is it sitting there for a whole year and it haven't done anything for you? Then you want to chop that away and chop that away and then reallocate that to something that will make you some money, especially if you're going through a financial situation and you need to dig yourself out of it. Okay. How much should I have to put down on a property that I want to purchase in my new real estate investment business name? Okay, you guys are coming with some great questions today. Yeah, I came with some good questions. Thank you so much for that. And this is actually the last question that we have already pre-submitted. So if you guys have some more questions, feel free to go ahead and put those in the chat. Okay. Here's the question that we have. How do I put down, and what do I know to put down? How much do I know to put down on a property that I'm trying to purchase? Now, generally, if you are in a business and you are trying to buy maybe a condo or perhaps a townhouse, even if you're trying to do a multi-unit, maybe a duplex or a quad or something of that nature, right? There are tons of different strategies out there. Trust me, there's going to be so many people that say, oh, you need to do this. You need to put in your personal name. You need to stay in it first. Da, 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 da. There's a lot of ways that you can do that. Okay. Some strategies tell people to buy the property in their personal name and then occupy one of the particular units, if it's like a multi-unit property, right? And then rent out the rest, and then your rent is free for the portion that you are renting out. And then the other 2, 3, 4 units that you have that you own is also paying rent. So it pays for the entire mortgage. That's actually one great strategy to start off with if you needed to have it in like your personal name and you don't have a business account, you don't have a business name and all these things, right? But if you are in the business space and you are a commercial owner, you own an actual REI. He said he has a business name. So that means he's in the business space. That's going to be a commercial loan. Okay. Don't get this confused with being a first-time home owner, or perhaps you're trying to buy a home to live in, to occupy. This is not what that question is saying. This question is saying, hey, I want to know how I can put money down. I want to buy a new REI in my business name, as a real estate investment company. That's what his question is. So with that being said, that means that he is going to buy the property in his business name and use it for business purposes and not occupy the property. Perhaps he's going to put in a tenant to this property. Maybe he's going to do a fix and flip to this property. We don't know if he is going to do some renovations, maybe the BRRRR method. A lot of people know about the BRRRR method. When you buy a property, you renovate it, you rent it, you refinance and repeat. You know what I mean? So with the BRRRR method, he could be trying to do the BRRRR method. He didn't give us enough information on that one to let us know if he's trying to do the BRRRR method or not. But regardless of what he's trying to do with the end game of that property, short-term rental, whatever, putting it into your business name, you can definitely know that you're going to have to come with 10 to 20% down. Okay. 10 to 20% down is the national standard for putting in money or business into your business name, a real estate property into your business name, and then wanting to use it as a property that you rent out, lease, or even possibly fix and flip or whatever. That is the normal standard for commercial. Why is that? Why does it work differently than you buying a property in your own name, okay, and you occupying the property and things of that nature? Well, you're working with the big dogs. You are actually in a commercial space. You are now entering the land of tax deductions galore, okay, because you can now write off every single thing there is about this property. Everything that you do to the property, all the renovations, the taxes, the insurance, anything that's related to this property, even the depreciation of the land, you're writing off everything on this property as a business owner. Okay. So this is something that you really want to consider when you're trying to put into business name. And also, You are making sure that you are clear of liabilities when you set it up properly, and your business name and your S Corp, your LLC, however you're structured, right? As you have that structured, now you want to make sure that you have all of your stuff together with your real estate attorney. You want to make sure you have all of your liabilities covered. You want to make sure that if someone falls on your property, they can't come take your personal assets because it's in your personal name. Okay, so those are the type of things that you have to think about. Do you want to open yourself up to liabilities in your personal name? So 10 to 20% is the norm of what you would bring to the table when you're buying a commercial property. Now, how do you get around that? There are ways. There are ways to get around how much you're putting to the property. It's the negotiations that you do at the table with the seller of that property. Sometimes people do seller financing. A lot of times they find other ways to knock down how much cash flow they're bringing to the property, or they may even do what we call creative financing. And that creative financing is they may very well take it from a 0% line of credit or a 0% credit card. They may go ahead and put it down on the property at that time, or they may even loan it against some other asset that they have that has equity. They may pull the equity out of another property and say, hey, I own that other property over there. I want to go ahead and do like the other gentleman did. I had some property he owned outright. He pulled that cash out and he went and put it down on another property. And then guess what? He fixed and flipped or whatever to that property. Now he got equity there. Now he's moving on to the next property. And it's like you're creating a domino effect, right? By using the assets that you have and how to maximize what you have, leveraging what you have to make sure that you're able to get to the next property and to the next property. So I hope that was extremely helpful. Please like, subscribe, and share, guys, this particular message with us. We really appreciate you being here with us. We tried to do it in 30 minutes, but got a little long-winded. Got a little long-winded, but we absolutely love that you're here with us at this time. Now, for those that are lenders, those are here that want to stay with us and need help, and they actually want to know what to do, we are offering our Financial Literacy Month special and promotion. We are going 30 minutes of direct consultation with your personal information on your asset and purchase of a commercial property for $99. If you want to actually make sure you can sit down with us and talk about your deal and say, hey, what do I do? Even if we don't stay with you as the broker, even if you use somebody else, you can say, hey, what do I do to get in this deal? What am I doing wrong? Why did they deny me? Whatever. How do I get around it? We'll actually sit down with you, look at your paperwork with you, see exactly what went wrong, tell you what to do to get it fixed so you'll be in a better position with your lender on the next go round. Okay. That's $99 for this month only, for financial literacy in the month of April. And for the first 5 people that actually do their consultation with the link that's just been dropped below, okay, you will also receive my customized renovation spreadsheet. And that renovation spreadsheet is very active. It actually allows you to put in the formulas, put in the amounts. You can see the square footage. You can even see an itemization of what it needs to look like for your renovations and some drop down answers. You can actually click on each of the cells and it allows you to do some drop down answers on that particular spreadsheet. So it'll be easy for you to already go in with your spreadsheet, with your contractor, with the itemized list and say, do we need to do this? Okay, check it off. Yes. Check this off. No. How much is it going to cost me? $2,000. Let me add that up. How much are my permits going to cost? Because you got to have permits when you're going in and you're changing all the renovations for particular properties. If you're going to, put in a new bedroom, or if you're going to do all these things that will change the square footage, or anything that requires permits like wiring and flooring and things of that nature, right? Yes, you want to definitely make sure you have that on your spreadsheet. So for the first 5 that actually book with us for their $99 consultation will receive that for free. That is a $200 spreadsheet, guys. So you will actually have a $400 value for $99 for being with us this particular weekend. Okay. And then also for those individuals that are here with us today that are in the insurance space, that are asking about what do I do to roll over my 401k from from a previous job, or maybe I have a 401k that I never did anything with. It's just sitting there, not making no money. What do I do? So we get that quite a bit. I don't know what's going on in this space right now where their 401ks is not making any kind of money. It's not doing anything. They're like, I'm leaving this job and I want to make sure it's making money the next time I go somewhere. So we can definitely, chime in and bring in our team for that, for basically looking at some comparables of what it would do if we put it in a particular type of space, like a 1035 exchange, for you to make sure it doesn't become a taxable event. There is a link for that as well. We just dropped that in at the very bottom. That is a free consultation, guys, to do that for your insurance. And also, if you need insurance and you don't have it, and perhaps you have a child that's 2 weeks old or older and they do not have life insurance, we can actually set them up for a small policy if you would like, or we can put into something that's a little bit more aggressive, totally up to you. But we can do a small policy where you put in some dollars to it and it can build the cash value for their college fund or whatever you want to build it for. Start early with those babies, right? Grandparents, we get a lot of grandparents that want to put insurance on their grandbabies. I had one lady like last year, she put MetLife insurance on 8 of her grandbabies, and I did all of them for her in one sitting. I mean, literally, you want to try to make sure you help position them, you put them in a great location, a great position where they're able to one day be able to pull cash from those policies to help with their tuition or to help with whatever they want to do, college or not college, military, or perhaps they want to do something else. That's the one thing that I love about putting money into those policies, is that they don't have to go to college for it to be able to pay out like a 529 plan. They definitely have to have something that has to do with education to do the 529 plan. Opposite of that is insurance. You don't have to have it go to the 529 plan for education only. It can definitely be used for other things, right? Like if they want to go to college, or if they want to, build their own small business, or perhaps they want to go in business with you. Maybe they want to say, hey, mom, dad, I decide I want to stay here and help you with your restaurant or help you with your lawn care service. I want to be a partner or whatever the situation is, right? When they decide they want to do for themselves and they want to have a career, you have already set them up. And just to give you, and I'm going to be real transparent with you guys right now, I actually did the exact same thing for my son when he was 2, and he's now 15. So you can imagine I'm overfunding his life insurance policy just so he can have extra money for college and things of that nature that he can use for outside of any type of scholarship or anything else that he may receive. So totally up to you, but it's definitely a great opportunity to do that, and we can help you with that as well. Okay. All right. So I want to see if we had any additional questions. I think we covered a lot of the questions over here. Let's see. I'm going to go through, and I see that we just have Miss Beverly. Those are the only active questions that I see right there. So if you are watching this and it's a recording, guys, you can definitely go in and put your question in below. We'll try our very best to be looking out for questions over the next couple of days, and then we can try to answer those inside the comment section for you as well. Okay, so hopefully that was very helpful for everybody. Thank you so much for being here with us. Remember to like, okay, and share this particular link as much as you can. Subscribe to our YouTube channel and go ahead and like this particular video and share it, guys. Share, because I promise you, you never know who this information can help. Okay. And we're here to try to be a light and try to be guidance as much as we possibly can, and to help anyone we can get in a better position for financial stability, especially during Financial Literacy Month. Okay. Thank you guys so much for being here with me. I appreciate you. Once again, this is Demetris Curry signing off. I will see you soon.